Hello, everybody. I am really kind of excited because this is kind of my first time doing the Wealth Press TV, and I'm excited to be talking to you today about U.S. cannabis stocks, and we're going to talk about why the Canadian cannabis stocks are lagging while some U.S. cannabis stocks are surging. We're going to talk about the entire cannabis industry and how it got started and is a publicly traded asset class in Canada, and but ultimately it is the American market to own, and the American market is starting to demonstrate that. I'm going to give you a little bit of background to start about how I came to be involved in the cannabis industry as an investment opportunity, probably earlier than almost anybody except maybe Chuck Raffici and Bruce Linton, who together co-founded Canopy Growth Corporation, which is the largest cannabis company, or at least it was. I don't think it is anymore by market cap, and it's lost a lot of ground, and that's largely because if you've been following their news releases at all, they are not profitable. They are majority owned at this point by Constellation Brands, who is the company that produces Corona beer, among other big brands in the beverage space, which Canopy is a cautionary tale, and we're going to refer to Canopy a lot because it was the first publicly traded cannabis company to list in Canada. And it's an interesting story about how that happened. But when the licenses were first being approved, Chuck Raffici was the CFO of the Liberal Party of Canada, which at that point was not the governing party in Canada. And so it's kind of interesting that Canopy got the first license after Chuck Raffici left the role of CFO of the Liberal Party just before they swept to power, based largely on their promise to Canadians that they were going to legalize cannabis. And so Canopy, by all measures, should have been the biggest and the best and should have left everybody in the dust. Unfortunately, the way the cannabis industry evolved legally caused them to essentially focus a lot on being the biggest grower, which is at the outset of the cannabis industry, which really got started May 1st, or sorry, the ACMPR Act came into effect on March 31st in 2000, and was it 14 now? I can't recall exactly the date, but first they rolled out the MMPR, medical marijuana for medical purposes regulations. And Canopy at that point was one of the first recipients of the first corporate cannabis license, but there was a constitutional challenge raised by individuals who had been licensed and prescribed cannabis by doctors under the MMAR regime, which was the regime first initiated in 2002, where Canada first started prescribing cannabis to medical patients. That was called the Medical Marijuana Access Regulations. And from 2002 to 2014, it was they were allowed to either grow their own or appoint somebody to grow their marijuana for them. And so all of these growers popped up who were now legally allowed to grow cannabis for patients, but there was a great deal of excessive cannabis production that leaked out into the black market. One of the main guiding reasons for legalizing cannabis, both in the United States and in Canada, was that it was going to put the black market for cannabis out of business, widely viewed as controlled by organized crime. And so when the first MMAR growers, the bad apples, the few among them who actually started to sell MMAR cannabis into the black market, that is when the government decided that this needed to be a corporate thing. And so that's how the MMPR replaced the MMAR rules. Well, then the people who had been allowed to grow it for themselves or appoint somebody to grow it for them launched a constitutional challenge in Supreme Court of Canada saying that you can't force us to buy corporate cannabis, which is going to be too expensive for us when we've had this whole lifetime of supplying our own medicine at a fraction of the cost of what corporate cannabis was going to cost. And so the challenge was successful. The MMPR regime lasted very briefly and was quickly replaced by the ACMPR regime, which is now the governing framework in Canada. And how does this relate to US cannabis stocks? Well, at the time, Canada had the advantage because it was the first G7 country to have a national regulated medical cannabis regime that was uniform across all of the provinces, which would be the equivalent to the states in the United States. So it was basically they had to roll back stopping people from growing it. And to this day, individuals in Canada can be prescribed up to 95 grams per day of dried marijuana. And I know this intimately because I applied for one of these prescriptions and I received a license to grow 463 cannabis plants at a time. Now, 463 cannabis plants could theoretically yield somewhere around 200 pounds. And if you did that 3 times per year, you're looking at 600 pounds of cannabis, call it $2,000 a pound. And you can see that there's a very large incentive for people to get prescriptions and bleed out their product into the black market. So in Canada, the black market still dominates the retail cannabis trade. And that is why, despite dominating production and dominating retail outlets, Canopy Growth has yet to turn a profit. And so if we look at how the cannabis industry evolved from 2015, when it really got started, billions of dollars were poured into these cannabis companies. And all of the founders and promoters and bankers who basically capitalized these companies at the outset were buying shares at pennies per share. And so the biggest volume of shares was purchased for the lowest amount of money at the beginning of the industry. And by April of 2019, when the third major correction hit all cannabis stocks globally, Canada saw the biggest devaluation in stocks. Some of them decreased in value by as much as 75, 80%. And in fact, many cannabis companies went broke. And there was fraud, and there was continuous violation of the rules. 3 cannabis companies were found to be using illegal pesticides on their crops. And those 3 companies eventually were absorbed by larger companies. But then the poster child for cannabis industry fraud became CannTrust Inc. And if you want to see what CannTrust was all about, you can just go to the Midas Letter YouTube channel and you can look for CannTrust. And I had the CEOs in my studio, and we shot 2 videos at their various facilities. And you can tell by those videos that everything seemed to be on the up and up, and they seemed to be like the best poised company to be one of the contenders for the largest cannabis companies. And in fact, at one point, CannTrust had a valuation above $5 billion. Canopy Growth had a valuation above $20 billion. And the entire sector was valued at over $100 billion prior to the third meltdown, which happened in April 2019. Now, if you look at the US major cannabis producers, the multi-state operators, we are seeing extreme coordinated market penetration by the likes of some of the largest ones. The HMMJ, Horizons Marijuana Life Sciences Index ETF. And this was really a very good representative of the entire marijuana industry. And as you can see, over 3 years, it had several spikes followed by major corrections. Each of those corrections was essentially catalyzed by those major tops. So when these tops started to happen, all these investors who had capitalized these companies at 5 and 10 and 20 cents a share, suddenly we're looking at profits in the multiple thousands of percent. And being promoters and bankers, they of course relentlessly sold, which catalyzed the major drops. But the mass exuberance of the investing public seemed to put a bottom on them, and continuing news out from some of the biggest companies drove prices higher again. And so there were three opportunities to really take money off the table in these three tops. After April 2019, which is in here, the entire industry went for a tailspin as investors got fatigued and panicked, and selling begat selling. And then all of the insiders and employees who had been awarded stock options suddenly were able to sell their options, and all of the restricted shares that had been piled up in these financings were free trading. And so it really became a case of, as it does in all bubbles that burst, there were more sellers than buyers. Stocks always go down because there's more sellers than buyers. Nobody needs to hear that from me, but that's what happened. So that was the opportunity. And since April 2019, the whole sector has been more or less wallowing along. Those who were fortunate enough to raise capital at higher prices and had solid bank accounts, particularly in the US, were free to continue to make acquisitions and grow horizontally through the industry. And so this is what has happened now. The Canadian industry has essentially been left in tatters. Canopy Growth Corp still has a healthy balance sheet, but that's because Constellation Brands put in the equivalent of $5 billion Canadian, 4 billion US, into the company, which gave Canopy a lot of runway. And other companies were not so fortunate. And I feel I should disclose at this point that, you can't, if Canopy management was listening to this, they'd raise their eyebrows, because I have to disclose that I have made a lot of money with Canopy Growth. And in fact, I am in production on a documentary film that is 100% sponsored by Canopy Growth Corp. So technically, I have to make this disclosure on the off chance that anybody interprets what I say as somehow favorable to Canopy Growth, because now I've disclosed the vested interest I have in Canopy's success. That being said, Canopy is really not doing that great and is not in a great position. They're starting to expend more effort in the United States making acquisitions. But for the longest time, the Canadian companies were not allowed to own US plant producing assets and be listed on the Toronto Stock Exchange. And that was a result of pressure from the US government that, well, okay, if Canada is going to finance these companies, then they can't be listed on the senior exchange. And that's partly why the US ended up with this advantage. And there's two major reasons why the US cannabis market is so different from the Canadian. One is size. Obviously, there's 10 times the population of users and people in the United States, cannabis consumers, over Canada. But also the range of products that can be sold in the United States is much broader than in Canada. In Canada, we just started allowing gummies last year. Recreational sales were only permitted in October of 2018, if you recall correctly, and if I recall correctly, rather. And so, whereas Canada has this over-regulated sort of approach that prevents sales of things like extracts and concentrates, which are some of the higher value products that are allowed to be sold in the United States. Throughout most of the US, you can buy wax, live resin, shatter, all of these different forms of concentrates, distillates, and extracts that essentially make a much broader product portfolio available to the cannabis consuming public in the US. And now, as the United States incrementally moves towards increased decriminalization, increased legalization, these large markets are coming on stream, and there's a handful of cannabis companies that are doing a fantastic job. Excuse me while I kill a mosquito. So here's a list of US operating cannabis companies, and you can see that starting at the top, Grow Generation Corp is actually the fastest growing cannabis company by market cap in the United States. It's grown by over 500 or almost 500%. NASDAQ listed GRWG. They don't actually grow cannabis. They are a supplier of everything needed to grow cannabis on a small, medium, and major scale. And so they're a picks and shovels play. Now, a company that's already grown by 456%, you got to wonder how much further and faster will it run. So at the end of this presentation, I'm going to give you a hint right now, but the top pick for my James West letter in September is actually in this list. I'm not going to tell you who it is because that's just for the subscribers of the James West letter, but you should be able to figure it out by what I'm saying. And there's a crazy deal on the James West letter right now. It's like $20 or something. And one of my top picks in the James West letter, just to give you an idea, was Novavax back in April, which went on to trade as high as $180 a share. Now, it's sold off, as most of the coronavirus stocks have sold off. It's down to 100, but a lot of my subscribers wrote to me and told me that they made many thousands of % on their investment in Novavax, as well as the rest of the COVID-19 stocks I invested or that I featured in a publication we called The Race for the Cure. So that's my essential forte. That's my sole value in life, is to make tons of money for people by picking out the companies that I think have the best chance to deliver the best possible experience to investors. So if you look at this list, when the stock market sort of went for a major correction from February till mid-March of this year, these companies all sold off like everything else. But since those lows at the end of March, this is the performance these companies. The Horizons ETF only went up 26%. That's because it's a basket of stocks, so there's bad and good. But Planet 13 Holdings has the biggest retail cannabis store in Las Vegas, up 385%. True Leaf Cannabis has, I believe it's something like 30 stores now in the state of Florida, which is their main base, and they have now spread out into Arizona and California. Green Thumb Industries, also a major multi-state operator. Air Strategies, this is an interesting company. It was really late to the game and came out of the chute at, I believe it was $12 or $15 a share in the midst of the meltdown, promptly sold off, now bouncing back, a well-capitalized company. Again, you can find interviews with the CEOs of all of these companies on the Midas Letter YouTube channel. And so I think every CEO of every one of these companies has been on at least once. Canopy Growth Corp, Bruce Linton became quite a dear friend of mine, and I actually last interviewed him in his backyard at his place near Ottawa. Bruce famously was fired from Canopy Growth, and that's not really a surprise after, obviously, Constellation Brands took over. It was really just a matter of time. And the performance of the company has not really improved that much since then. But again, Canopy Growth, I believe, can't be counted out because they still have the financial support of Constellation Brands. So all of these companies have really started to take off again, whereas the Canadian ones have recovered slightly. Canopy Growth Corp was the original Canadian listed cannabis company. It was originally called Tweed. They were the first company to list on the NYSE, and so Canopy should be able to make up a lot of lost ground as they focus more on U.S. markets. The rest of these companies are all great companies. As I say, I know all of the CEOs, and I've talked to them all. But there's one in here in particular that I think is poised to really outperform. True Leaf Cannabis has already increased by 269%. If you recall, there was a short report issued on Trulieve back when it was trading at, I believe it was $17, took it down to $14, but the company just keeps on increasing revenue dramatically, and it's just doing really, really well. So I'm so excited to be seeing these companies take off. Tomorrow, I have a conversation with Matt Bottomley, who is the cannabis analyst at Canaccord Genuity, one of the larger independent investment banks in Canada and the US. And we're going to talk about a lot of these companies. So that'll be available to James Westletter subscribers as well. So yeah, there's major reason that the bifurcation is one of these overused terms in financial markets. Bifurcation meaning that the market has basically split into two. There's the haves and the have-nots. The have-nots. So the haves are the companies that you see here that are adding dispensaries, adding retail, adding production, increasing revenue, and getting closer to profitability. Apart from Trulieve, none of them have really delivered successive quarters of profitability that were not somehow adjusted EBITDA or some other non-IFRS or GAAP accounting term profit. They've all been able to demonstrate some profitability, but none of them have real sustained profitability on a non-adjusted basis as of yet, but some of them are getting close. So Trulieve has been the beneficiary of the investing class, as has Planet 13 and has Grow Generation. And some of these ones down here, lower down, are actually where the opportunities really lie, I believe. I'm going to point out at this point that Curaleaf Holdings is actually now the largest cannabis retailer in the United States and has still only grown by 211.36%. So that's one of the ones that I think is probably got a lot of compressed value in it that will be starting to come to the fore as investors start to return to the cannabis market now that we have this new class of cannabis companies that are all doing exceptionally well. And so that's the beauty of the cannabis industry in the United States is you've got much broader product array, increasing legalization in states like Florida, California, the big population states. I won't be surprised if federal legalization actually becomes an election issue at some point. I would have thought it would have been by now, but nobody's really made a big, huge deal out of it, except Bernie Sanders. But there you have it. So what's going to continue to drive the value of the U.S. cannabis companies? State-level legalizations are going to continue. We've got 5 states that have applied for legalization ballot measures in the November election: Arizona, Mississippi, Montana, New Jersey, and South Dakota. MSOs are strategically positioned within certain states. MSOs means multi-state operators. And that's why Trulieve has such a head start in Florida, is because they were first mover in Florida. Well, they were the first U.S. operator to get started in Florida. Florida was originally dominated by an array of Canadian operators who also had U.S. presence. So the market share of U.S. companies is growing. Recreational sales are growing. The black market in the United States is much more firmly regulated than it is in Canada. And that's probably a result of the fact that there's just a lot more law enforcement agencies in the United States. You have your city police, your county police, the sheriff, the state troopers, the FBI, the DEA. You've got layer upon layer of law enforcement, whereas in Canada, they've got the federal police. The FBI equivalent would be the RCMP. In many towns in Canada, that's the only police. Most of Western Canada is only RCMP. And then you've got city police in some cases and provincial police. So there's only 3 agencies, and they have much larger territories to control with much smaller budgets, much smaller populations. So in Canada, it's a lot easier to get away with illegal growing than it is in the United States. And so that will continue to have Canadian companies on the back foot trying to catch up to the United States. You look at California's legal adult use market, expected to reach $3.5 billion this year. and projected to be 5 billion by 2025. That's massive. Florida marijuana sales up 143% since the beginning of January, and US legal cannabis spending in its entirety is expected to go up to 30 billion by 2024. So there is nobody projecting numbers like that in Canada. And in fact, right around where I am renovating my house, I'm in a small county. Total population of the whole county is 40,000 people, but there are at least 50 major grow operations here. And we have the added element of First Nations grow operations, and some of the biggest ones around my area are First Nations operated. And there's just no way to regulate First Nations because they have their own police. They have a much stronger sort of autonomy in Canada than they do in the United States. And so we have all of this black market growing incentive happening with these crazy prescriptions where I got a license. I'm legally allowed to smoke up to 95 grams of dried cannabis per day. I can tell you if I smoked 1 gram of dried cannabis that I would be basically a basket case. I wouldn't be able to do this webinar. I'd be wanting like a bag of cookies and a liter of milk, and I'd want to go and veg out in front of TikTok or something. So the US companies are going to keep on keeping on, and that's why I'm in my James West letter, I swore I wouldn't go back to the cannabis industry until I was sure there was going to be a clear winner. The top pick for September is a clear winner. It's in that list that I showed you back there. So the top pick here, this should give you a hint as to which one that was. The stock is up over 200% since COVID lows. Notice I don't say up over 300%. Analysts are projecting a 30% lift in the current stock price. So this is basically the professional investing sector predicting at least a 30% rise, which is, you can't say that that's where the stock's going to go, but I tend to agree with the analysts. They have surging revenue with a strong balance sheet. They've made enough strategic acquisitions to make them the largest cannabis vendor in the United States. That should help you figure out who I'm talking about. So for now, thank you very much for watching. I really appreciate your attendance. Feel free to email me at jwest@midasletter.com, and I hope to hear from you all soon.